Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. I teach a course where traders learn two specific gap trading strategies. The first one are the morning gap trades. That's when stocks are gapping higher or lower at the open. It creates an opportunity for traders. And the opportunity is for traders to identify a specific price level where a stock will likely be drawn to like a magnet and have a price reaction from in the other direction. In the course, traders learn exactly how to calculate those specific price levels. The second strategy in the course is a gap fill strategy. When stocks gap higher or lower at the open, it creates what's called an open gap. Open gaps, most of the time, will be filled, which means a stock will come back to fill an open gap. The other thing I do is I give traders an opportunity to get my gap trades each and every day sent to them at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market even opens for trading. And just like magic, here's the email that went out this morning, and as you can see, 9 o'clock a.m. Eastern Standard Time. On the board this morning, we had 4 potential gap trade opportunities. Unfortunately, none of them hit our levels today. We're only interested in trading a stock if it hits the level that we've calculated as the highest probability level where we can have an opportunity for profit. Now, yesterday we had 3 potential trades and it wound up to be 4 trades. Today we have 4 potential opportunities and we had nothing hit their gap level. That's okay. Why? Because every day traders get a secondary list. Remember the gap fill trades I discussed? I put out a list of potential gap fill trades each and every day. These are stocks that had a morning gap higher or lower at some point in time. We've identified the gap fill level, and at some point in the future, these stocks will come back to fill their gaps. Well, if you look down at the second one on the list, PCAR, see where I say gap fill level is $65.97. It's a short trade at that level, which means the stock is going to trade up to that level and then have a price reaction downward in the other direction. So remember, what I'm doing here is I'm teaching 2 gap trading strategies, the morning gaps and gap fill trades, and then I'm providing traders that want to get my gap trades each and every day with a daily list of opportunities in both categories. Let's face it, the one complaint I hear from traders over and over again is, I can't find anything to trade. What should I trade? I'm giving traders an opportunity to see what I deem as the highest probability trades for the day. Now, we may have more gap fill trades that hit today, but as it stands at the time of this video, only 1 is hit so far, and that's okay. We take what the market gives us each and every day. If the market gives us 4 or 5 trades, fantastic. If the market gives us 1 trade, fine. Only interested in the high probability trades. That's how you are successful in this business. So now we're going to look at a couple of charts. Now, one of the morning gap trading opportunities was Walgreens Boots, WBA. The level identified this morning was higher than the high of today in this stock. Today, the high of the stock was 81.34. We were interested in taking a short trade on the stock at 82.97. It didn't get there, but the stock collapsed anyway. It created another opportunity. And folks, this is right out of the course. I teach this in the course in no uncertain terms. The stock came back down to fill the gap that was left open by the fact that the stock gapped higher this morning. It filled the gap, reversed, and traded higher. That's another opportunity that traders could have taken advantage of if they learn the strategy through the course. Now here's a little nuance and a little trade school lesson. The gap fill level was just over $77 a share. However, stocks like big round numbers and they like small round numbers. So 77 is a round number. When a stock approaches a round number or you have a price level you're willing to take a trade that's just near or right above, in this case, a round number, I like to wait for a pierce through of the round number. So you see my line on the chart comes in at 76.90. Maybe it was 76.85. Maybe it was 76.93. Some amount of pennies, if you will, below the round number is where a stock will likely pierce through the round number and have a price reaction in the other direction. Now, this one went slightly lower than just 8 or 10 cents because the market was getting killed at the time. So when the market's getting killed, you're going to have downward pressure on most stocks. That's common and normal market behavior. But in the end, it stayed within the stop loss limitation that I outlined in the course, and it reversed higher, producing positive results for anybody interested in taking that particular gap fill trade. If I just move this over a little bit, you'll see here that the stock already traded a high of 77.71 for anybody that was looking to buy the stock at around $77 or slightly below, or even at the gap fill, which was slightly above, had a positive result out of this trade. This is right out of the course, folks. Every trader that takes the course learns this specific strategy as well as the morning gap trading strategy. Now here's a chart of PCAR. You remember this one from the gap fill list, and the gap fill level was $65.97, and as you can see here, the stock hit a high today of $65 and what? 97 cents. As soon as it hit that level, you can see what happened. It collapsed down. It did not disappoint. Currently trading, making a low so far of $64.93. That's a tremendous gain off of a gap fill trade that was identified and sent out to traders at 9 o'clock in the morning, 30 minutes before the market was even opened for business. This way, you have a plan going into the trading day. We know what we're interested in trading. We know what prices we're interested in trading them. When stocks come into the price we're interested, because it's a high probability level, that gives us the confidence that we're going to have a positive and profitable trade. Traders, come over to check out the course at lazygaptrader.com. You can learn everything you need to know in order to trade the gaps successfully. I'm David Frost, lazygaptrader.com. Thanks for tuning in, traders.